Welcome to Trading Lounge and the Australian report for Thursday, July 8th, and starting with the ASX. Here we've got that nice move up here, which is impulsive, meaning 5 waves. So we should see a little correction move back and then further to the upside here. So there's a good case that this correction is completed at this point that we talked about yesterday, based on we've got that nice impulse wave to the upside. So we're going to explore that a little bit further, and then that means that the banks probably will push up too from this point. Let's just cruise in and have a look. So on the hourly chart, like this now, Thursday is normally the bear day, so it can open higher and then trade lower for the day. So I'm not quite sure. It looks like it's kind of finished if we look at this as 1 and 2 here just naturally, and look at probably 3, 4. So we're near the top. You can see the market's creeping up here. And when we talk about creeping, it's got this low here creeps above the high here. So we don't see that in the trend here, but we just see it at the end of the trend. So we've got the beginning, the middle, and the end. So we're somewhere close to the end. Thursday's got a habit of opening higher and then trading down for the day. So we're looking for some sort of ABC pattern to move up. Now, the 50-60% retracement level is probably down here somewhere. It may just touch on this 730 here, or may even just come to the, well, even a bit higher. It doesn't have to be as big, you know, but what we want to do is we want to recognize the top, and we want to recognize the second top here as the B wave. And then obviously if you wanted to draw lines through here, that would be good. If we do get a bearish day today, it's later in the afternoon that well, anytime after they come back from lunch, really the futures market, it boils down to the old futures days. So yeah, I think it's probably just worth talking about a little bit. I haven't traded SPY futures for quite some time, so I don't know what the average volume is. Let's just say that it's 30,000, so 30,000 contracts would get traded a day. So that's 15,000 in for the morning session and 15,000 out for the afternoon session, just basically sort of speaking. So the morning session is really just, well, for me, till like 11:15, 11:30 maybe. So really just that first hour and a half. That's when all those orders will be in. And then if there's 15,000 contracts in at that point, then you know that it's an average day. Whatever that average is, you'll need to look that up. Just go to the ASX futures, SPY futures. It should tell you there. But if it's 15,000 is the average in the morning, and you've got a bullish trend going here, and you're only getting 5 or 7 or 8,000 in, well, that's very low, isn't it, for that morning session? So it's unlikely that it's going to follow through in the afternoon session. But if the average volume is 15,000 and you get 20,000 in the morning session, well, then you know it's going to continue to push on through that lunch period, because they would go to, after 11:15, the volume really starts to diminish at that point to 11:30, and then you're going into sort of lunchtime. So it's not really until 2:30 and at the latest 10 to 3 that the big hitters would come back for the last hour and a half of the day. So you've got to kind of work out what's going to, you know, understanding how much volume is coming in the morning session, or tell you what's going to happen through that period, that next period of that lunch period there, because it's a bit like a poker table, basically, the ASX futures market. There will be 1 or 2 companies that, you know, that are fighting for control for it each day. I mean, of course, you've got I don't even know who the players are anymore. I don't know where Morgans are or anybody else in this. I mean, Macquarie's really just use it to hedge a lot. So they'll lift all their hedges off around 5 past. Once the physical market closes, then they'll start unloading their hedges for the day on that regard. So about 5 past 4, you'll see the futures market run quite nicely after that, right up to well, it closes at 4:30, so up to 4:27. It will run quite sort of nicely, and then there'll be mayhem in the last sort of 3 minutes or so. But yeah, understanding the average volume, if you're trading this, and in fact, if I was trading this market here full time, I would be trading futures contracts and not CFDs. Futures contracts are much cheaper. And, you know, for every buyer, there's a seller rather than these floating casinos. And half of them you can't trust. You know, they'll run your stops. You can just read that in the PDF, in the product disclosure statement. So, but futures contracts require more capital, and you need to, you need to have your wits about you as well. There's no crying to mummy after you take a loss in the futures market. So let's just drill in here. Sorry for waffling on. Let's go to the tick chart here just to have a look at this area here for this. So I started to count this up through here, but I wasn't quite sure, couldn't quite get it. So 1 and 2 and 1 and 2 here, and then 1 and 2 here. 1, 2, 3, 4, 5 for the third wave, fourth wave, fifth wave to make the third wave, the fourth wave. And so wave 3 up here. So 1 and 2 and 3 and 4. Now I could put 5 sitting right here, but that wouldn't be the case because this market, that high there has made a new high above here, I think. So I'm not sure where that top is. So like I said, it could open up. It could just drop from this point, or it could, it could play up here further and then sort of drop. I don't know, but we don't have that wave 2 yet. Okay, that's what I'm trying to say here for this. So I don't know if it just comes down from this point. I mean, technically, it come back to the 50-60% retracement level. It's always good to draw that in. So if that is the high sort of area there, then we can look at it down here for that. You know, that's important. That's all in group 2, 65, 72 and 80, subgroup 2 area. You should know that by now. And yeah, but I would imagine that we're going to see Friday and Monday and Tuesday be bullish. So it's just a matter of incorporating this ABC correction in today somewhere. It might be right from the opening or 20 minutes after, so to speak. But this is really where we want to be going long from, drawing, that B wave high, or drawing a line through here, all that sort of thing, wherever it may be. Or even buying back into this space here would be okay as well, or buying on the 7.3 or anywhere within group 1 here. Yeah, so I'll just leave you with that. Of course, if the market drops below the 7.3 here, let's just take that for an example, then when it works itself back up here and finds itself in support here, little classic trading levels pattern in here, you want to be building in through all of these levels here. You want to get 3 or 4 positions into this area through here with the view of adding on the 50 here. Okay. Anyway, that's what I do. But so banks, let's check on the big elephant in the room, which is CBA. We've got wave 4 here, 1 and 2 and 3, and as you know, we've been looking at this here. It's not a very easy pattern to think. Is it finished? Look, I really don't know, but it was nice to see the market up here yesterday because that lifted the ASX up. And because the ASX is going to make a run, we probably make a run here as well. So I think the idea was to wait to see if we get support on, we want support on top of, want the first high above the level here to go long on here. I'll just have a look at the tick chart. I don't think it can tell us a great deal at this point. I mean, this is the way that I'd calculated it so far here. that wave C can go there, because that would be 1 and 2 here and 3 here, some sort of ABC for 4 in here, and then wave C. So this is also the 98 is also the 38.2% retracement level. It really doesn't want to go down, does it? But it's either gonna take that low out, or it's going to pop up here. They're the two things. And what I wanted to do was, if it does pop up here, get that first high above the level, and that be like over here, then that becomes our reference point here, and then you can drop it down to that second reference point here. So it's got that second one. That's what we want to do over here as well. So we want the market to prove to us that that it's going to go higher. Do you know what I mean? And we need to be on the right side of the market, and to that extent, that tells me that the right side of the market is finding the closest largest number and being on the right side of that. So if we're going to go long, then we want that 100 as support, because that's where all the sellers are. You know, this could easily be down for 1 here, come back for 2 here, and then go down for 3 here. That's all possible as well. So anything can happen here. It's not a very clear pattern, but it does make an A wave, a B wave, and a C wave. It does. That could be the low, but I can't confirm that. It does look like we're getting a bit of an impulse wave off the low here, 1, 2, 3, 4, 5 here, a bit like the ASX. So that could also pull back in here as a little ABC pattern here today, and then push up from that point. You may want to look at taking the B wave out here for that, based on that impulse wave here. We'll see. I'll leave that with you, but safe trade, not so safe below the level. Splitting the bets could be the go. Let's just check on ANZ. I use ANZ a bit too, because I mean, rather than Westpac, because ANZ's got, you know, slightly different interests than the other banks. I mean, they're all banks in the same boat, but they've got more of an Asian presence as well. So now here, like I mentioned before, I don't know. We've got wave 3 and 4 here. I don't know if we should put wave 5 sitting on the top here, or we look at this as wave 1 and 2 here and then going up. But to me, this pattern here has just really been playing out here, and it looks like it wants to pop to the upside, doesn't it? So we talked about being long above here once. We could also do the same again here if you wanted to go long, keeping the stop. We didn't get triggered before, but keeping the stop under this bar here. So a bit of a robo move here, but probably Friday's the best one to do that on. Oh, we had increased volume yesterday, so something. Okay, let's have a look at resources. I haven't looked at iron ore, but we got it positive. Yep. So as I've mentioned over this week, is that this could be anything, basically, this pattern. I know that it's bullish corrective. I'll go back over it. This ABC here is very clear. It's in 3 waves. It makes it corrective. It means that from this low here, the market could make new highs. That's not out of the realm. We could be in some, because we've got 3 waves here, we could be in a triangle pattern, which would be some sort of A, B, C, D, and E here. That's all possible as well. There's a lot that could go on here at this point. So I'm getting mixed signals here with all of this. So even this move going up here, I'd like to treat it as bullish, but this move from this low here to this high here, that's in 3 waves here. So that makes it a little bit difficult to be bullish to the upside. So probably an A and a B and 5 waves up for the D wave, and then back down for this in 3 waves here for the E wave, and then up from that point, you know. So I'm not quite sure. And all of this could just be part of a larger B wave over here for this. There's a few things that can go on here, but what I can say in the bigger picture, if you're buying iron ore stocks, then that's good. Because this move here is corrective. So long-term holders, not a problem. And any dip that comes down, you'd want to buy more. And speaking of iron ore stocks, Fortescue. So let's just go to the daily chart here for a moment. I mean, this has got to be one of the best stocks, Australian stocks. I mean, I haven't looked at all the stocks in the Australian market for quite some time, like I used to. I haven't done that, so I don't know what's around and what the best setups are at the moment for everything. But FMG here for a long-term hold. There's a couple of things here. First of all, this move down here is corrective, so at some point we're going to be taken out that high. At some point, this market's going to be at $30. This stock here pays a dividend of something like, I don't know, 6 or 7% or something. I mean, that's got to be good, you know. So I just don't know the structure here, though, because this move down here is in 3 waves, so it's also corrective as well. It could be that we have a B wave over here and then down for the C wave over here, because I can only count 3 waves up here as an ABC. Maybe I've got that wrong, but I have pulled it apart, so I'll just stay with the situation at the moment. This could be the B wave high here with down for 1 here, an A and a B and a C for wave 2 here, and then come down for 3, 4, and 5. I just don't know. You know, that's my thing. I know that this is bullish and we're going higher. I have no problems with that whatsoever. It's just that, do we go straight up from this particular point here? On the tick chart, coming back here and just drilling into that area there. So the situation here is that this top here can be wave 2 here. If we were looking for that B wave to be over here, yonder here somewhere, to put it in over there, then it would make, it's way over there, but I'll just put it there. Then this would be the A, B, and C wave here for wave 2 here. So this is the point where it can go up to the B wave here and then just continue all the way down here. But what we're looking for here is we're considering from this low to this high here, we're looking at this being 5 waves. Now, this being the A wave, the B wave, and the C wave here. So once that happens, let's just clear this up a little bit, because I think this is quite interesting. So we've got our rally. The rally looks impulsive, by the way. It looks like it's 5 waves. So that's not much. I prefer to look corrective. Maybe that's the whole correction here. But what we can do, I mean, first of all, we can go long above that. Okay, that's step 1. What we're trying to do is get a better price. So we'll take that top there. Look at that. This is the 50-60% retracement level area in here. That's where we would expect it to fail from and move down in 5 waves and then move up. If that's the case, then we can look at being long above the B wave top here. But that's got to come into play first here, of course, but then we're still going to see this move down from that point. But it just gives us our next step, and then we'll be able to probably, you know, do something like that to get in a little bit earlier as well. We could buy down the bottom here, but that's the risk, because that wave 2 could also be in play. Probably not, and you know, and I've probably made a mistake on the daily chart over here, and there probably is 5 waves in here, but I just couldn't see them. So I could only count this as 1, 2, 3, 4, 5 for the A wave, the B wave, 1 and 2 in here, and 3 here, and 4 here, and up for wave 5. So we had this A, B, and C wave here. So I have to respect that. I just can't put my head in the sand unless I'm, you know, unless I can work it. So this means that if you're long already, that's okay. But basically that top there, because that's in 5 waves now, because this would be wave 1 with an A and a B and a C wave here. So that would be, you know, that would be the wave 2 top sitting right there for that. So that moving up through that would send us bullish at that point. Okay, so got that sorted. Rio Tinto, so just on the tick chart, 100 ticks, we were working this as 1, 2, 3, 4, 5 here, then looking for the A wave, the B wave, and the C wave. So we've got this now in there. So that's that into the box. So in this case, you may be long here already, so we're keeping the stop out of the way. We can move the stop up if that helps. We can move it up to here for the time being, because we don't want to see wave 2 get any bigger and uglier than it is, because the size of this in relationship to wave 1 here, it looks about right, you know. So is this an impulse wave to the upside here? It's the same as FMG as well, isn't it? So I think we'll just wait and we'll see, because what might happen today is if everything goes according to plan, then we'll get that little ABC back here, and then that will give us another opportunity to get in lower over this point. But it's at that point that makes or breaks that. We need to have a look at BHP in the US, so I normally look at that first. So once again, here this is 100 ticks. So we're basically looking for wave 1 here with an A and a B and a C wave here, and then counting up through here as yada 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 as wave, what's the name? We can go along above here. I've probably mentioned that, but this would also be wave 1 here as well, so we'll need to copy that probably there and there. If not, you can buy the pullback here now that that's breached that top there. Is there any other exposure at this point that I need to be aware of? Any other counts? So we've moved out of that here now. We've moved from that, which is nice. So I mean, that was a big thing. So yeah, we should just see that push up. Of course, this can fold back here for a bit before pushing higher. You might want to use that to get in. Let's just go to the daily chart here for this. So the question is just worth going back over this a bit. We've got wave 3 up here. Wave 4 can be here, and then we can look at that as wave 1 with an ABC for wave 2. Now, I cannot confirm that until we take out that top there, this B wave top. As an A wave, a B wave, and a C wave. We need to take out that top. But even if we took out that top there, we could still be in a triangle pattern of some degree as well. But taking out that top would be very helpful. It would tell me that we won't be taking out this low again, and we'll know where to put our long-term stops at that point. Otherwise, here we go an A and a B and a C and a D and an E wave over here for wave 4. So as a long-term holder, it's not a problem. We know that these markets are corrective, and we know that we're going to be going higher. This market is working with 80 and our local market with 50. Of course, the exchange rate plays out here, of course, with all of this. So with that, I mean, you can calculate it basically where BHP will open and be for the day based on this price here from overnight with the Australian dollar. So you can do that. That's not like a biggie. But sometimes I find the Australian is the dominant one, you know, so got to be a bit careful. Let's have a look at the Australian BHP. So we're counting 5 waves up here. Let's just go to the bigger picture first for the daily chart. So it's the same story here as well. In that, I mean, I kind of like wave 4 being here. It's a little bit small and simple, but so was this one, and this one's a bit bigger, so that's okay. This US BHP could count for 5 waves up here where FMG couldn't, but BHP in the US does. This one here is a little bit trickier to count, so it could be viewed as a B wave, but the same thing applies as well. That top here, this here is wave 1, an A and a B and a C for wave 2. May or may not be the case, but we wanted to confirm it by taking a move above 50 would do that. And we counted 5 waves up here, so it was looking quite good. It's a little bit rough and ready around here, but we'll just stay with it for the time being, and hopefully we can just get a move up through that there, taking that top out there. That will be so helpful. Still doesn't get us out of an E wave correction over here, because we could have, yeah, an A, B, C, D, E, and then up from that point. But if that's going to be the case, we're going to be looking at that E wave being above that. Well, I'll put it under the trend line, not to get you too excited, but something of that nature. So that could play out. So we could still be in the triangle pattern at this point. But otherwise, my primary count is that we're just going to be pushing up through here. So, yeah, good. I mean, I've been holding BHP for a while now. I think I bought it over here somewhere. So I've been through a little bit on it, but it's just a, what's the name? Okay, so that's that. What else do we need to look at in this space? Nothing. Well, crude oil, which will play a part on BHP, of course, is into wave 4 now. So we'll look for that turn. So just in the bigger picture here, 1 and 2 here, going up for wave 3 here. And then 1 and 2 and 3 and 4. And then 1, 2, 3, 4, and 5 here for this. So we're going into a correction here. Normally the first wave down, the A wave, is normally sharp, and we're seeing that sharpness there. There is support at 7,000 because we've seen it lift up, back up off its lows here on the daily chart. I won't go to the intraday chart until I've got more data here, and we'll look for the setup on the long side for that. Yeah, crude at 80, not a problem. You know, it's just going to move up with the stock. It's the same count as the stock market to a point. Stock markets haven't got to this wave 3 here just yet, but so I might need to relook at this a bit. But yeah, all in the same direction. So copper was up a little bit. Let me just clean this up a little bit for us here from yesterday's yakking away. So let's just go to, just to get the picture again, not so much the monthly, it was the weekly, was it? I've got a nice 5 waves from the low here, 1, 2, 3, 4, 5 for 1 and 2, and then we've got 1, 2, 3, 4, 5 for 1 and 2 here. Third wave's a bit short, but I'll run with that, and wave 4 and wave 5 here for wave 3. Wave 4 can pull back to the wave 4 one lesser degree. The 38.2% retracement level has already been touched on, so we could put wave 4 here and being completed at that point, or we could get another move down. It's open to have another move down here for that. So we're close to the low. The low may be in, but it's a little bit sort of iffy. But the takeaway here really is just to sort of point out that, you know, we're in that trend and it's still got higher to go here. I mean, hopefully this is wave 1 and 2 here. This is the same pattern as gold, actually, in that regard. And also, too, as it was pointed out to me, thanks, Wayne, that the US dollar playing a part in all of this. So let me just bring this US dollar index up here, keeping an eye on this. So, well, let's just rehash a little bit of yesterday's stuff as well. In the bigger picture here, I think it's, we need to talk about this a bit now. So this is a weekly chart. We can go to the monthly, is probably better. I just need to talk about it for myself. I mean, I'm just talking to myself, so to speak, anyway, but, well, it's not quite true, but so this is a monthly chart. We know that the move down here, then we've got this corrective move back up, and then we've got this impulse wave down here. Now, we could still be, you know, moving to the downside here for all of this. This top here down to the low here puts us at the 61.8% here. Now, from this is a little bit tricky to count going up here. It can be counted in different ways. I've counted it as the A wave, the B wave, and the C wave here on this top. And it's pretty clear that we've got 5 waves in this move here for the C wave. This here is an A wave. I like it as a B wave because it's quite a big A, B, and C here. If it was a wave 2, it would just need to be shorter. It would just be one of these lengths here, basically. But because it's really, because the B wave is bigger than the A wave in terms of time, then it makes it more like a B wave. But the other thing that I like is about it being corrective and moving down further, is that when we take the distance from the top here to the bottom here and we get our 61.8%, what I normally find is that if I get 5 waves to the 61.8%, then I know that we're bullish at that point. But we don't have that. We only have, we have an A and a B, and we have 3 waves to the 61.8%. So that would give me more definition of being bearish at that point. And while they're printing money, you would expect it to be bearish. But I wouldn't, when we expect things like that, we get the opposite, Just when we thought we had it all sorted out and it made sense, then it doesn't make sense. So it's always the other side that sort of gets us. And when you think about it, the amount of money that they've printed in the last year, does that really, what's happening in the dollar, is that really representing this moving? It should move down much further, wouldn't you? I mean, it's printed in the last year, it's printed like 40% more money than it had before. Like 40% is something in the last year, whatever it is. I mean, it's not my area of expertise, but you would think with an extra 40% of money supply in the last year, you'd think this would, devalue, dilute further. So we do need to be careful about these things. But as it stands, we can look at this as an A and a B and a C wave here, then down for 1 and back for 2, and then going down for wave 3 here. Now, if this was wave 3 coming down here, then we would need to look at this as wave 3 coming down. We would need to look at this here as, well, from the top here, we can look at this as wave 1 here. Needs to come down further. Then we'll see a higher wave 2, 3, 4, and 5 here for this. So I know that this little bump here is corrective, so that needs to still have one more little move down here, down to 88 or 85, and then it needs a little correction back up for wave 2, and then it would be down for wave 3 at that point. That's kind of what we're looking at, this 5-wave structure in this move here. Now, the other side of this, as a bullish move here, if we counted this up for wave 1 here with an A and a B and a C, for wave 2 here, and then this up here, we couldn't label this wave 3 because this wave 4 here has overlapped wave 1, and we wouldn't want to see it at this degree of structure. So this would also have to be wave 1 up here and coming back for wave 2 into this box here, which would be about right, and then just move higher at that point. But it still needs to finish this other little move down here, because even as an A and a B and a C wave here, for wave 2 as wave 1 and 2 and 1 and 2, yeah, so there's still a fair bit to go. I don't think that anybody has got this sorted out just yet. I can see that it can go both ways, but with the money dilution and this pulling back up to the 61.8% in 3 waves, yeah, it's looking pretty corrective, but we'll see. From the monthly, we'll just go into the weekly, and of course, this yesterday I was looking at it in terms of Bitcoin, but we also need to look at this in terms of commodities, don't we? So all of this, so. So from the top here coming down to here, this would be this, we're looking for 5 waves, and this would be an A and a B and a C for wave 4. I'm still expecting this to move up a little bit higher here for this, at least get to this wave 4 top over here for this. This is the weekly chart. So it's possible for it to move from this low here. It's possible to, that means that, let me just do here from this high down to, so I'll take it to this previous low there, just above 88. That would leave us with this wave 2 possibly coming back up to that point. So that's a pretty high, like even once this little correction here is an A and a B and a C wave finishes here and then comes down for wave 1, then it's got to go back in three moves to wave 2 here, back up to 95. So that's going to place a lot of pressure before getting this next move down in wave 3, which will be much further down, of course. So that's the weekly, just on the on the daily. So from the B wave top over here, we're looking at, if it is B wave, 1 and 2 and 3 here, an A and a B and a C for wave 4. So that's what we're working with at the moment with this. So yeah, we're just looking for it to move up further. I think it's still got further to move up, but it's close. It just depends on how you count this little guy in here. So we'll just go to the hourly chart. Yeah, well, that could be a top in play there because we got this wave 1 here and 2 here that we'll talk about yesterday, and we had this 3 and 4 that were in place. We're looking for one more move up. So that can be there for that now. So that would be there. All of that, the 3rd wave, 4th wave and 5th wave. So that could possibly go in here. What sort of, when we'll have a closer look at that. But the other point down here is that, as I mentioned before, I can leave that as wave 1. Technically, we should put wave 2 here, but should wave 2 go over here? Because I've got this extra move here. I don't know what to do with it just yet. So what we can do is understanding this move here. But if we get a move above this high here now, I mean, it should correct here. But if we get another move above here, that means that I'd have to include this as a 1 and 2 in here as well. I'm just going to go to the 15-minute chart just to have a look at this. Just see what I've done. So taking from this low here, this wave 4, we were counting this as wave 1. Somebody said I could right-click on that. And that doesn't give me any height there. Yeah, it doesn't. What I need to do is to be able to change. See how that 1 and 2 here, see how small it is? I mean, I need to make that a little bit bigger, like visually make it bigger, but I can't sort of do that. I mean, it's part of this tab here, this little Elliott tab in here, this 1, 2, 3, 4, 5. So I can change it to the degree of structure, but I can't seem to change it to the size of it. I'm sure you can. Thanks for whoever sent me that message. Thanks for that. I'll have to read it a bit closer. But that does make here as 1, 2, 3, 4, 5 here for that. So that's possible to have that top in there now. That's based on that little track that we've been going through here on. So I'm okay with that. So let's just see how that plays out. Yeah, like I said, there's just that move down the bottom here, this move here. I don't know if to include that or not. I guess we have to, really. Yeah, so I think we'll probably see some sort of classic trading levels pattern at 93. And that will mean that we'll see some sort of reaction here maybe. And then the first high, that will be that last structure coming in. And then working lower from that point, failing to get support on this level here. Be something like that, I think. Or we go straight down from this point here. Okay, I'll leave that at that. So we're still working on that. But if that tops out and starts to turn down, then this is going to be helpful for this market. But I mean, copper, you know, the main market really is traded in the UK, isn't it? You know, I don't know the volume compared to COMEX and, you know, the London Metal Exchange. Anyway, sorry to waffle on. Coming back to this point here, this wave 4. So there can be one more little move down here, or we can have the low in. That's the bottom line for that. And just on the daily chart here. Yeah, so it kind of boils down to, if we get the 9,500 as the tested support, then we're going to be going up from that point. If not, we'll be coming down. It's just simple as that, if it can't find support. So if it breaks lower from here, then you know that it's doomed at that point. We could still look at this as wave 1 here with an A and a B and a C wave in here, as we have been doing on the 4-hour chart or 1-hour chart. A bit of a long shot, but so I've adjusted this here. We know that from wave 2 here we got 1, 2, 3, 4 and 5 in here for this. So it doesn't look like it, does it? It looks like it's 1 and 2 and 3 and 4 and 5 coming down. So let's just see if we get a new high above here, then we're then copper's got its low in place. But otherwise, this will work lower. We can look at this as wave 1 with an A and a B and a C wave here. That kind of works. It's a bit rough and ready. We would need to push up from that point, but it also plays out reasonably well as a corrective pattern here as well. So yeah, it just boils down to the 9,500 becoming the support or not. That leads us to the Australian dollar. So with the Australian dollar as well, the 4-hour chart, we know that it's corrective, bullish corrective. It's just, is that the low, or we got another low to come into place? We know that it's corrective because we've got 3 waves here in the first leg here. So that's what we're up against. So maybe as I mentioned yesterday, we'd need to look at this as 1 and 2 here, and then 1 and 2 here, and then 3, 4, 5 for the third wave, spike back up for the fourth wave, to the fourth wave of 1 lesser degree, and then work lower from this point. I don't really know, but what I do know, now that that's pulled up there, we can go long above that high. So that's something. This here, yeah, let's just see a couple more sessions here and we'll know what's going on with the Australian dollar and copper. They'll just come into the same fold. Newcrest Mining on the gold side of things, it popped up nicely here. It still doesn't mean a lot to me popping up like that, but at least it's heading in the right direction. Do you know what I mean? So yeah, so we'll just give this a couple of sessions, and then we'll go back over this on the tick chart, and we'll figure this out a little bit more here. But I've been bullish on this based on the 1, 2, 3, 4, 5 here for this as 1, and pulling back to the 61.8%, which it has done. So we could put that, as we've talked about before, we can put that low in place here now. In terms of going long here now, we really need to see an impulse wave, and the impulse wave would be something like this first one here. So there's going to be, it'll be a little bit quicker because it's moving into the third wave, but it'll still be, it'll take you quite high before I can get you in. It'll be something like 1, there'll be a 1 and 2 and a 1 and 2 in here, but I'll just put it as, it'll be something like this here. So obviously once we got those 5 waves, we can go long over here for that, but that's a long way off at this point, you know. So I think one of the things we could do is look at group 2 here. So this is the medium level here is our support, and then we've got 2650, 27 and 2720 basically, and 28 here. Obviously we want to be long above the 28, of course, you know, but it could, you know, if you're going to go long in this and you've got yourself, you know, some pocket money, you might want to split it up into 3 bets or something, you know. But the first one would go on the 2650. The 2650, you'd need to find it as support. See how it sort of played out here a little bit? So it could do any of these sorts of things here. But what you're trying to look for is to do your best to get a classic trading levels pattern in here. It'd be very small because it's in a little third wave moving up through there. I better have a quick look just at the 20-tick chart here, just on the low. Well, no, that's fantastic. Oh, that's, hang on a sec. Oh no, that's the whole thing, isn't it? I thought, oh, we've got 5 waves here. But it's not, it's this little guy in here that we want. So I can label it. That's 1, 2, 3, 4, 5 for 1 here. That's 1 and 2, probably not the right degree of structure. This is 1 and 2, and this is a third wave coming into play here. So we're going to see, just pull this out a bit further for us. So this will be 1, 2, 3, 4, 5 for 1 and 2 and 3 and 4 and 5. So that's the third wave. So I'll just draw this out. So in one way or another, that's 1 and 2 here. And we've got 1, 2, 3. It's not quite there, is it? Our 2650 is here. That's what we're sort of gunning for. That's going to be 1 and 2, and that's going to be 3 and 4 and 5. It's going to take us up to the 2650, and then we're going to see some sort of correction here. I mean, the thing you could do is you could go long just here, but that means you'd need to put the stop here. Because this would be 1 and 2, and this would be 1 and 2, so we can put that in. And this little one in here would be 1 and 2. So this strong third wave in here, right here, that's the middle. So we want the volumes push that there. So we're not going to see the market come back below that area. So this would be the safe. So at 25, 62, 25, 62. $25.62. I'll forget that, but the main point is that you know where it is. I'll put it 61. Anyway, that's there. So if you wanted to go long now, that's where the stop would need to be. Oh, look, let's just make it sort of simple, shall we? Let's just put it under these lows here. Anyway, I'm just trying to keep it safe, you know. So that's that. Let's just have a look at spot gold, because we need that in the right direction as well. So what we're looking for here, we talked about yesterday, we're kind of looking for the first high above the level. That's what we were looking for yesterday. Okay, so in a nutshell, we've got the first high above the level over here, of course, and that's moved above the 61.8. So we've got an impulse wave here, and we've got a corrective wave here. You see that little corrective wave here? So that's good. It still might get more corrective. It still might be an A wave, an A, B, C for the B wave, and then 1, 2, 3, 4, 5 down here for the C wave. But, yeah, the normal course of events, we would go long above that top here. Then we could bring it down to that top. We can bring it down to that top. And now we can bring it down to that top. So that's the trigger. And also, we want to be able to copy that. We want to, this is 1800 here, and we've been waiting for it to become the support, okay? So what we can do is we can build in on the 1800, but we didn't, so we can go 10, 20, and 30 at that point. This must be 5. I must have had that there, I don't know. Anyway. So what we want to do here, just to get this straight, it's not a perfect world, but if we're going to build in at the beginning of the trend, you know, we've got that position here, but and that's okay, but yeah, this is the next sort of leg here for this. So these guys here, it looks impulsive here, because I was thinking that, well, this could be the A wave here, the B wave here, and then the C wave coming back down. But it is looking quite good for this over here. But don't put in too much that you couldn't accommodate from, let's just double check this. This is a tick chart, by the way. So from that top there, that's the 61.8%. So we need to accommodate, you know, a move below that. And if you're trading an ETF, then, you know, better, of course. And that's just the swing range at the 1800. So it's still possible to have something like this and then move up. But I think from what I can see here, based on this being an impulse wave and a corrective wave here, doesn't look very good on the close here, I have to say, but it's probably 1 here and ABC for 2 here, up for 1 here and back again for 2, and then building to the upside at that point. Anyway, that's that. I'll look at silver, so that's okay. What else do we normally look at? I think that covers it, doesn't it? I should have a script for this, but life is not a rehearsal, so I don't need to do that. Just, yep, okay, I'll leave it at that. Alrighty, thanks for tuning in. Cheers.